Thank you for joining us this evening for the new episode of Terrazzo Talks here in Dubai. Also, a very warm welcome and greetings from the United Arab Emirates to all our viewers from around the world. I'm Labraj Talwar, the Managing Director of the Terrazzo Group. We have with us today two eminent panelists for our new session, Daniel Howlett and Dr. Bernd Van Linder. I have the pleasure to introduce Daniel Howlett, who is the Regional Head of Commercial Banking for the Middle East, North Africa, Turkey within HSBC Bank Middle East Limited. Dan is responsible for all commercial banking activities in all countries across the region, including client coverage, global trade and receivables finance, global cash and liquidity management, and all commercial banking operations activities, the latter of which includes global standards, business risk and control management, and commercial banking business management. We are greatly privileged to have a person as experienced as Dan for our session today. A very warm welcome to you, Dan. I would now like to hand over to my co-moderator, Yuvraj, who is the Business Development Director of Terrazzo Group, and will be introducing the second panelist, Dr. Bernd Van Linder. Over to you, Yuvraj.
Thank you all for being here today on this third episode of Terrazzo Talks. The topic of today's conversation is how resilient are the banks? And rather aptly, we have just the right men to help us answer that. Today we have two phenomenal panelists, and obviously Bernd Van Linder and Daniel Howlett. Dr. Bernd is an international banker with 20 years of experience. He built his career at ABN AMRO, Netherlands, before moving to the GCC region, where he was general manager, treasury of Saudi Hilali Bank in Saudi Arabia, before becoming CEO of the same bank in 2009. Dr. Bernd Van Linder holds a PhD in artificial intelligence, which is very relevant today, from the University of Utrecht, Netherlands, and graduated with a Master's of Business Administration degree in Financial Management from the University of Bradford. So welcome, Bernd. Daniel, thank you so much for being here. We have a very relevant topic, as I said. So let me just explain the format. As usual, we're going to have 5 to 6 questions that we will pose. And then we will follow that up with 2 to 3 audience questions. We may not be able to fit all of them in, but we'll do as many as we can, time permitting. So with that, I think we can move to our very first question. And it's start off relatively generic. We're living through unprecedented times with COVID-19. There's no secret there. Both of you represent significant capital institutions in the Middle East and specifically in the UAE. So how have both your banks fared against the backdrop of COVID-19?
Just to add to your very Bank of Dubai, having left Saudi at the end of 2016. Coming back to your question, it's indeed unprecedented times. I must say, when I look back at when this started, say in February, March, I'm probably most impressed by how we dealt with it as an institution. From having 0 people working from home, at some stage we had almost all of our staff working from home, including all of our colleagues in India who were working from their homes during lockdown. And we essentially were able to do that without skipping a beat. I think that's probably the most impressive achievement, and one I'm extremely proud of my staff for having achieved that. In terms of performance, the biggest hit for us has been on our net interest income. As the result of the crisis, global central banks have lowered rates, and essentially the whole world is now at 0 rates, if not negative. That has had a major impact on our net interest income. And unlike the international banks, which typically have a large markets operation, which has done extremely well in this time of volatility, we were not able to compensate for that. So we've been hit hard on net interest income. In the months of April and May, the bank came almost to a complete stop, as you know, with ourselves being in lockdown as well as our clients. We have recovered well from that. And I would say today we're probably back to around 80% in terms of business volumes, not necessarily in terms of revenues, but in terms of business volumes. Essentially all of our lines are doing well: investment advisory, treasury, Trade is lagging compared to last year, but the rest is doing okay. And I'm pleased to say that August was the best month we had since March. So that there's clearly a bit of a recovery, which was also the topic of some of your previous talks. I think it's too early to talk about non-performing loans. We put in lots of support measures to help our clients and to help the businesses through this crisis. So that's not something that we've seen too much of today. I think that's a summary of where we are today.
And any surprises for you in any of that? What has surprised you most?
I think the biggest surprise was the moment that I think we had no more than a handful of people in a handful of branches. We had all of our staff in India working from home, and it still functioned. I never believed in working from home. I never believed in video conferencing as an alternative to face-to-face meetings. And suddenly we were all doing it. We had our staff working from home and it worked. We had Teams calls or Zoom calls and it all worked. That to me was a massive surprise. And I clearly was very wrong on this technology not being able to at least complement the face-to-face meetings.
I think quite a few people that we've had as panelists in the past have echoed the same sort of sentiment. Dan, what do you have to say in general? Dan, we can't hear you.
Can you hear me now?
Yeah, you're good.
So look, I couldn't agree more with Bernd actually. When I look at surprises, I think the key thing that struck us was how quickly we were able to transition to entirely working from home, 9,500 people in the region. But I think beyond that, the use of technology, what it meant was that we were able to actually contact more of our customers and with greater frequency. So actually our customer satisfaction has improved materially through COVID. We've been able to maintain contact with over 90 more frequently than we ever. Employee engagement, I'm sure Bernd's seen the same thing. Actually, our employees, notwithstanding the many challenges they face by working from home, I actually found that they've been able to be brought more closer together through the technology and the regular contact they've had. So a better engaged customer base and a better engaged employee workforce have been probably the two things that have surprised me most through this period. If I look at the way in which the business has performed, we actually started very strongly this year. We had our group board here in Dubai at the beginning of the year, which I think was to signal how important the UAE was going to be in 2020 with Expo still then in the offing. And obviously that's no change, but I think it's a reflection of how important the Middle East is to HSBC as a region and how important the UAE is. So we started well, but obviously the impact of COVID-19 as well as rates falling has had a material impact both on our personal banking business as well as on our commercial banking business. Debt-led activity from a global banking perspective, particularly public debt to sovereigns and GREs, has gone well. And you're absolutely right, Bernd. We've been able to sort of perform actually very strongly from a broader foreign exchange and rates perspective, given the spread of our book. I think, but alongside that, I would say is that, a bit like a commercial bank of Dubai, I think we've strengthened our capital ratios through this period. I know you're going to ask us in due course, I'm sure, about how resilient the banks are going forward, but I think our capital ratios have meant we've been able to withstand something that none of us ever expected to happen. Yuvraj, I know you've got a background in economics, so you'll understand this. We've not been able to model the scenarios that we face today. There are no financial models available to sort of try and replicate what we've all experienced through COVID-19, not just here in the UAE, but globally. But I think the other thing that stood out for me is the way in which our customers have now sought to embrace technology more. So more and more of our customers have realized that paper and manual processing and going to the branch network is perhaps something of the past. And they've looked much more at digital and become much more comfortable with digital banking, online banking, and using our technology to speed up their processing. And I think that's one thing that will continue to be a feature of our banking going forward. More online and less manual and in a branch network.
Right. So just to touch upon the topic question again, how resilient are the banks? So in the lead up to this episode and just to get a broader understanding of industry problems. I've understood that banks have built significant sort of capital buffers and operate in what I guess the West may call a cushion zone, if I can term it like that. So, Bernd, you sort of touched upon non-performing loans, and it's too early to comment on that. But in the coming months and years, banks might pass from what's the cushion zone today into the caution zone, and may need to significantly change the actions that they take to preserve and raise capital, and decisions about dividends, buybacks, and compensation. So if I may ask, it might obviously be way too early to comment, but how far along both your respective banks, the cushion to caution curve, are you specifically in HSBC and Commercial Bank of Dubai?
Yeah, I think it's a very good question. When you look back after the global financial crisis, the 2008 one, which had a sort of a limited impact in this region, there were more local crises that were much more important in Saudi and here. But when you look back after that, the regulators clearly focused on building the capital position and the liquidity position of the banks. We had all kind of new ratios that we needed to comply to. There was a view or a focus on improving the quality of capital. And I think what that has done is that, unlike in the last crisis where the banks, especially the big national banks, were a part of the problem, I think today banks are a part of the solution. Have high liquidity for HSBC as well. And that is something that has helped us to sort of help the governments globally, help the central banks to support the end users. When you look at it, I think in every country in the central bank and the commercial banks have essentially been transmitting that to the end users, and have been able to do that because of their strong capital and liquidity position. I think most of the banks, including stage, as you call it, I am also not too negative about the economic developments, and I'm not quite sure if we would move to caution. I think Lovraj himself mentioned in one of the previous calls that Dubai is like a trampoline. It comes back, and anytime it comes back better. We've already seen lots of recovery locally. And for sure, from a net profit perspective, this may not be the best year for the banks, but I think in terms of balance sheet strength, in terms of capital and liquidity, banks will be in a very strong position for years to come. And I think we are there to support the growth of the UAE, in our case, through this crisis and coming out of this crisis as well.
Right. Very interesting. So, Dan, would you concur with that? Is there anything you'd like to add to that?
So absolutely, I completely agree with Bernd. So I think the financial crisis of 2007 was, as you know, an endogenous shock because it was from within the financial system. It started with the US mortgages market and then spread throughout, I guess, global financial institutions because at a fundamental level, banks were undercapitalized for the risks that they were taking, and that led to the recession of 2008 and beyond. I agree with Bernd. I think to an extent that the Middle East was able to withstand those shocks quite well and actually recovered quite quickly, certainly compared to the broader market. I guess this is, in coronavirus terms, it's an exogenous shock. It's outside of the system. And so you're absolutely right. I think the banks can provide part of the solution and ensure that economies are able to recover more quickly. So I do feel that, in a way, the prudent way in which we've all sought to preserve and build out our capital structures since the financial crisis has helped. So our core capital ratio, our core tier 1 ratio is 15%. Now, pre the financial crisis, it was probably half that. When you consider that in the context of a $1 trillion balance sheet and a market cap of just under $100 billion, that's quite some buffer. And I think what's important is that means that we're able to provide relaxation from a loans perspective. We're able to provide holidays where clients need them. We're able to defer and reduce charges. And I know this is stuff that Commercial Bank of Dubai has done as well. we as a bank very much see ourselves as part of the solution here. We want to work with all of our clients, and hopefully we're going to get questions on this over the course of this call about where, clients and customers and potential customers need our help, and where they feel there are things where the banks aren't delivering where they should be delivering. But at this point in time, I think we're in good shape. And I am with Bernd that I am cautiously optimistic for not just the UAE, but the broader global economy. And since in the last 2 weeks, I've seen a material uptick in deal activity, client inquiries, foreign investment, both out and in. There certainly just seemed to be, particularly in the UAE, but also in a number of other markets in the region, a general sense of momentum.
Yes. What Bernd just said about the trampoline example, it's what I firmly believe in. Dubai, I've seen Dubai have these ups and downs at least 5 or 6 times since I've been here, almost more than 40 years ago. And it always bounces back. No matter how distressed the situation, it always finds a way to bounce back and stronger and better than ever before. And I see no reason why the same thing won't happen again. So that moves us on to the next question. Financials and governments redesigned the financial system in order to make it safer after the debacle of 2008. Has the recent economic shock shown any benefits of this redesign? Has it helped in any way to cope with the present situation? Who would like to take that question? Dan, would you like to take it?
Well, I think Lovraj, I think it builds on Yuvraj's previous questions. So I would say absolutely that the additional capital that banks now have put in place post the 2007 financial crisis have certainly meant that they've been able to withstand the challenges and pressure that we've seen from the coronavirus and the challenges thereafter. And I do feel that banks are now sufficiently liquid to continue to support their clients. But let's not forget, we've also had support from government as well. And here in the UAE, the test program, I think, was a very thoughtful way of trying to make sure that companies were able to access cheaper funding and get the support that came from that. And one of the things I've been really pleased about, and I don't know whether Bernd has seen this as well, is that it's really worked. So customers are now repaying those facilities that were granted in the test and repaying them quite comfortably, and have now got their own liquidity to move forward. So absolutely, I think that we have learned some of the lessons from the past. It does note the fact that we're going to be in for some choppy times in the next 12 to 18 months. But at a fundamental level, you only have to look at some of the debt raising taking place at the moment. A fantastic deal today by ADNOC with Apollo. You're seeing lots of creativity in the broader UAE, and some of that will undoubtedly be injected back into the economy.
Great. That's good to hear. Bernd, would you like to say something on this?
Yeah, I agree with everything Dan said. I think banks are strong. We all of us have strong capital positions that support the loan growth and support allows us to keep on supporting our customers. I think the central bank with the test program got the liquidity side completely right as well. There was a bit of I wouldn't say there was a scarcity, but a bit of a scare perhaps at the end of March. The test program was launched and the liquidity situation normalized straight away across the UAE. So I think both the government and the central bank got everything right. And as a result of that, the banks are able to keep on supporting our clients. And then it's right as well, we see the same, those that needed to support in sort of the depth of the crisis are on their feet again and are conducting business as usual, including the business with their bank.
That's great to hear. Great.
So just to build upon that, I think if I could just summarize a few of the lessons that could have been learned in the last financial crisis, in that I think it'd be fair to say that building banks' capital is not optional, but a requirement. And as Dan said, government has stepped in significantly this time around. And I think the other lessons that we could highlight would be that, the speed at which financial systems, plumbing, so to speak, can become clogged, or the rapidity with which liquidity can disappear. and the difficulty of selling assets in a plunging market, so to speak. I think if I can summarize 2008, that's how I would personally summarize it. I don't know if you would agree or not. And I do, as I concur with both of you as well, that those 3 or 4 things that I just highlighted, I think they have proven dividend, at least in whatever redesign was implemented back in 2008. So with that, I'm just gonna, if anyone has any comments, please jump in. Otherwise, I'm gonna go to the next question.
The only thing I would say, Yuvraj, I think we've also been helped a little bit by oil. So I think that modest recovery in oil prices, I think, has also helped in the region, because I think that would have caused. And I think the fact that the region has sought to diversify since 2007, so there is a more diversified economy here now. Oil remains important, but it's probably less important than it was, 10, 15 years ago. And when you actually look at the government direction in the UAE, I'm very excited. I'm sure we'll come on to talk about this, the ways in which they're seeking to direct the economy into these new growth sectors going forward.
Right.
If I can add one thing, another lesson I think that I would have learned from the 2008 crisis is that banks need to be managed conservatively and always need to be focused on doing customer business. I think it's true for every of the local banks in the region. It's also true for a bank like HSBC, which always has had conservative capital ratios, never had to rely on any government injection or anything like it. And I think that's a big lesson as well. And since most of the banks have become more like it, they're now in a much better position to keep on supporting the real economy.
The other thing I'd say, Yuvraj, is that all customers matter. I know that's so whatever size or scale, this is a delicate ecosystem. So if one takes a different approach to companies in a particular sector or of a particular size, I think it has consequential impacts on the wider economy. So whatever work is undertaken has to be holistic. And the other thing I would say is that what I've seen is a very responsible approach by the wider banking community in the region. So I came from the UK, where there was a lot of coordination when companies got into difficulty. And when I first arrived here, I felt there was less coordination. They describe it as London rules, where banks work together to try and support companies when they get into difficulty. And when I first arrived here, my initial observation is it wasn't about London rules. There were no rules. But what I have found through the crisis, the COVID crisis, is a lot of concerted attempts by banks to work together to ensure that companies that are in difficulty get the right level of support. And that's to be applauded, because keeping companies going through this period is going to be the way in which we accelerate the economy into growth.
Right. No, thank you for that. So I think this is the perfect opportunity to sort of segue into the next question. And that is, you touched upon the oil price, Dan. So when I'd written these questions, obviously oil price wasn't where it is today. So I'm just going to rephrase it slightly. So I think given the impact of COVID-19, governments and central banks may want to take steps, as they did in the last crisis, to keep sort of banks from slipping into the danger zone. So we're very CBD and HSBC are in very sort of privileged positions, I might say. I'm sure not all banks are sitting as pretty as CBD and HSBC. So for example, governments could consider supporting industry-wide bad banks, which would absorb banks' worst performing assets, the banks that aren't doing specifically well, and keep them originating in institutions focused on supporting the future of sort of productive output for the real economy. So if I can be more specific, governments and regulators obviously play a role in shaping direction of the banking industry by encouraging sort of strong banks to maybe acquire weaker ones, making tough choices on failing banks, resolution mechanisms, and sort of so on. So on the backdrop of COVID-19, has there been a new wave of consolidation talks amongst banks in the Middle East? What can either of you tell us about this?
So I guess from a perspective of a bank that I wouldn't expect to be part of the consolidation, I would say that inevitably the region is arguably overbanked. There are more than 70 listed banks in the six-nation GCC, catering to a population of about 50 million people. And so that's probably too many. We've seen some consolidation already in Saudi, as well as in Qatar and some of the other jurisdictions. And I think what will drive the consolidation is probably less the impact of COVID, but actually just the wider costs of compliance now that you face in the region, the new accounting standards, the speed of technology and technological innovation, which we've seen through COVID. And then I think the requirement of banks to operate with much higher levels of corporate governance. And I think what that means is that if you're a small or medium-sized bank, the cost to serve, the license to operate is just higher. And that is what I think is going to drive further consolidation amongst some of the smaller banks, rather than, volatility in oil prices or the coronavirus. So I just think it's a long-term structural change towards larger banking institutions. Bernd?
Yeah, I think then is correct, but allow me to be a little bit controversial. I think when you look at the mergers we've seen so far in Saudi and in the UAE, it's typically the bigger banks getting together. In UAE, the mergers we've seen so far, I think all of the banks, with the exception perhaps of Hilal, were top 10 banks of the 50 or so operating in the UAE. In Saudi, you first had the NCB, you were first at Saudi Alandi and Saab, both of which were top 10 banks or top 7 banks even. Then you had a rumored NCB Riyadh Bank, which would be number 2 with number 4 or something like that. Now you have NCB and Samba, which is number 2 and number 5. So I think Dan is absolutely right, but we haven't seen it yet. The mergers we've seen so far are all driven by one leading, strong common shareholder. I think in almost all of the cases, there's one common shareholder who's driving the merger. And that's the right thing to do, because I think the economy needs bigger banks. I think the cost of regulation and the cost of digitization is a real factor. So I would expect over time, purely on an economic basis, some consolidation among the smaller banks as well. We haven't seen it yet.
I think the other thing we need to see as well, Raj, is the development of alternative financial institutions. So, and by this I mean I feel there's a real need in the region for some concerted venture capital and private equity support to the SME space. And we did something like this in the UK with the Business Growth Fund after the last financial crisis, something that's been very enduring. And certainly when I speak to governments and regulators, as well as some of our smaller customers, they're very keen to have more patient capital deployed to help their growth and support. And so I do feel we need to look as a collective of banks at ways in which we can perhaps support the next generation of growth companies here in the UAE and the wider region. Because I think it's a very entrepreneurial and creative environment we have here, but actually it's quite hard sometimes for companies to get the level of capital that they need to grow. And they're not going to get that from a conventional financial institution.
I fully agree. I think we've seen some good initiatives in Saudi, in the UAE, in providing financing to the SMEs. But this is already sort of the stage after what you described then. And I 100% agree there is room for a bank-owned or bank-backed or a bank-government cooperation in providing the first stage funding as well, for sure.
Dan, Bernd, why would you think, given how entrepreneurial the UAE is specifically, why would you say there's a dearth of sort of VC funding in the country?
So look, I think VC funding provides a degree of structure, order, and discipline. So I think it helps in terms of providing a governance framework for companies as they start to grow. It provides a network and a sounding board. I think it can be quite lonely as an entrepreneur when you're starting out a business, particularly in a dynamic but quite challenging environment like the UAE. I think it gives you access more quickly to alternative markets as well as international markets. So I feel it has a lot of value and merit beyond. And I think a lot of entrepreneurs, you only have to look at what you see in North America. the UK, Europe, as well as Asia, to see that venture capital has got an increasingly important role to play in the diversification of economies. So I see no reason why it shouldn't apply here as well.
So I guess what I was trying to say is, why do you think there's a scarcity of venture capital in?
I think partly it's because this is still a relatively less well-established economy regionally. So I just think it, but I don't think there's anything to stop it. I think there's also been, historically, lots of, informal support, but I feel something that's more structured would be a benefit to all.
Right. Fair enough.
So shall we move on to the next question? On the corporate front, I can safely assume that risk appetite is low amongst most regional and international banks. As capital institutions, which industries are you bullish about in the region? How does your risk appetite vary sector by sector? I think a lot of our audience wants to know this.
I'm not sure if I agree with the question or the statement that you embed in your question, Lavraj. For sure, risk appetite has perhaps changed somewhat, but I wouldn't say, from my perspective, it is almost as much a question of demand as it is of supply. There is much less demand for credit today than there was a year ago, because our corporate client base is also looking at the market and sort of reorienting themselves. So from our perspective, we have remained open for business throughout the crisis. We're open for business today. We have a strong capital and a strong liquidity position, and we are there to support our current and prospective clients. So it's not that risk appetite has changed or that there are certain sectors that we look differently at. I think, and perhaps when Yuvraj was asking it, another lesson from the whole COVID crisis is that in any sector you have good and bad companies. And being too strict on saying this is a sector we don't want to do business in today is not something that's going to work. When I look at our client base, across any sector, you have companies that have been very forward-thinking, very proactive, have taken all the right actions early on in the crisis, and you have companies that have fared less well. So I think for a bank, there's much more of a challenge in focusing on the right companies in any sector than necessarily focusing on the right sectors. But in terms of risk appetite, we're open for business.
Great. Dan, what is your opinion?
Well, I completely agree with Bernd. But what I would say as well is that whilst there are good and bad companies in every sector, if you actually look at the region and you look at the key drivers, the fundamental drivers, particularly from a demographic perspective and some of the government-led initiatives to diversify economies, I do feel there are certain sectors that are certainly going to show accelerated growth in the future. And those include healthcare and pharma, I think agri, food and water security, logistics in pretty much every sense, clean energy, retail, but in an online context, education, both in a bricks and mortar context, particularly in higher education, where I genuinely believe there's an opportunity for the UAE to become the region's hub for higher education. I think technology, we all know how fast people in the UAE are adopting new technology and how many devices they like to use. And then I think there is some work around some other opportunities in sort of newer manufacturing. I think sustainability is key, the way in which our cities will evolve in the future. We live in a future city here in Dubai. I think there's a lot more opportunity for us to be able to build back better. So those are the areas that I remain optimistic. I think will offer accelerated growth opportunities, not just in the UAE, but in the region. And then candidly, I think there are certain sectors which we will probably see less reliance upon in Dubai and the wider economy. And they include airlines and hospitality, the automotive space, real estate, as well as oil and gas. And whilst it will always be a very important feature here, certainly for as long as I'm going to be around, the reality is that I think it will be less relevant from a sectoral perspective for banks in the future than it has been in the past.
Okay.
Right. So Dan, I just want to expand upon what you just said. So I think it's safe to say that banks will tend to allocate their limited capital, at least in a time like this, to their most profitable loans or most profitable sectors, from a short-term perspective. And I guess as a consequence, certain industries will suffer, as you said, airlines, hospitality, potentially real estate, construction, industries that are very reliant on debt. And governments may want to sort of provide banks with incentives to support specific segments of clients, such as the sectors you've mentioned. And so I guess it's fair to say that that an incentive could be an option, because if a lot of banks exit a certain sector, such as construction, a sector that we're part of, that is sort of known to be very reliant on bank debt, if banks pull out all at once, or at least deleverage all at once, it could cause significant problems for certain industries, such as hospitality. So how do you suggest sort of the government and capital institutions such as yourselves work together to stop such a problem happening? Because I believe it has happened maybe in the West in certain sectors in the past. Maybe you can comment on that more than I can. But just a thought.
Yeah, look, I think, so I don't think these things are going to happen overnight. I think these are things going to happen over time. And therefore, I think most well-organized companies will be able to ensure that they restructure their balance sheets and the way in which they're organized from a capital perspective to deal with the fact that there may be less bank liquidity available to them going forward. But look, as Bert will testify, the ability of banks to lend money is tied to the ability of companies to generate cash flow. So if companies can generate cash flow, banks are able to lend money to it. And the more cash that they're able to generate, the more debt they're able to service. And so I think the challenge with some of the industries that we've reflected upon that have got these difficulties is that they are very asset heavy and they're very long dated when it comes to their sort of returns that they can generate from them. And they're probably less agile, whereas the sectors that we think could offer long-term accelerated growth in the region are asset light and very agile.
And do you think those symptoms that you mentioned for those specific industries are sort of here to stay, or are there more short-term pains that those industries will go through, and their sort of cash-to-cash cycles will shorten as time goes on?
Yeah, look, I think they'll come up with different operating models to ensure that they're able to continue to sort of develop going forward. They'll probably look at alternative ways of attracting investment to support them. They probably need, in the same way the banks were needed to be better capitalised, they'll probably need to look at different ways of being capitalised going forward. Absolutely.
If I can add something, and I think Dan is right on certain sectors growing faster than others, but that doesn't mean that the other sectors will not grow, and the other sectors are here to stay as well. If you look at Dubai, airlines, hospitality, real estate. If you look at the UAE as a whole, you can include oil and gas as well, construction. These are very important sectors for the UAE economy and for the Dubai economy. If I look at ourselves, we are the bank already in the, not just in the GCC, but in the MENA region with the highest exposure to real estate. And we actually grown our real estate exposure throughout this crisis. We are bullish on the construction sector, where to us, it's more a matter of paymaster, of sponsor and track record of the company than anything else. But if both of those are in place, then we're very happy to engage in financing projects. I think it almost ties in with one of your previous questions. The banks are well capitalized, the local banks. Most, if not all of them, have a growth agenda, and that agenda will allow support of all of those sectors. So I think over time, Dan is absolutely right that allocation will change, but that will take time. And all of these sectors that are there today will remain to be important for the Dubai economy and the UAE banks for quite some time to come.
Right. So just moving on a more global front for a second, I think it's fair to say as well that governments have been a lot more involved in their dealings with banks, and they've had, the US with their payment scheme. The government has just generally been very involved. Do you think this seems to be a bank-supported economic recovery globally? Keeping that in mind, would you say that government should be more closely aligned with banks to achieve a common goal of economic recovery? Is there any conflict of interest between government and bank, private or public? And I'm not just talking about the region specifically, but globally, if you'd like to comment.
I think banks, by nature of their business, have sort of a special position in any economy. Banks are always working with the central bank. The central bank is the bank for the commercial banks, right? So the central bank is typically a government or at least a public institution. So I think in probably in every country that I'm aware of, there is a close cooperation between commercial banks, central bank, and hence the government. I think what worked very well in this crisis is to use the commercial banks to sort of transmit all. It worked extremely well in the UAE, but even in countries like the US, in much bigger economies, much more complex economies, the commercial banks have been used as sort of a conduit to provide the government support and the relief to all the retail and corporate clients. So I think by nature of the business, banks are different from, say, a company such as yourself, and always have this public role to it by virtue of the fact that they can create credit. So that relationship is there. I think it got stronger in this crisis, for sure. Dan?
Yeah, no, I agree with Bernd completely. I do think it's got closer. And if you actually look at the TESS scheme, the Targeted Economic Support Scheme, the Central Bank of the UAE doubled that stimulus to, I think, 256 billion dirhams. And that's very powerful. And I think their new funds now exist around about 50 billion dirhams of capital buffer to the banks. I think there's another 50 billion at zero cost to extend finance, and around about 95 billion for liquidity in the market. And then a 61 billion dirhams from a reduced cash reserve requirement on the part of the banks. And then there was the extension of zero cost funding, through to December 2020 of another 50 billion dirhams. So I feel that the UAE has been quite creative and thoughtful, and it's absolutely been a partnership with the banks. Lots of dialogue. They were great at receiving feedback on ways in which we felt it could be moved around and accelerated. And I think it's brought us closer together.
Right.
I fully agree. I think very proactive central bank, great communication, very pragmatic as well, making sure that it worked, that it was not just an announcement, but it actually that the measures went where they were most needed. So completely on aligned with.
And you're right. If I compare it to, say, what's interesting is I think the fact that no one's talked about it says that it went really well. If you look at some of the other markets, lots of noise about people not getting access to funding. If you look at the UAE, very, very little noise, which says that they got it right.
Yeah. I think you're right. Absolutely. Yes.
So I think I'm not saying anything because the last question is basically refers to government stimulus, potentially TESS, targeted economic support scheme. So I'll come back to this. So I think we're ready for the next question. So I'm gonna just ask. We have plenty of. So this is slightly different. We have plenty of entrepreneurs watching this talk, many of whom run businesses that are strapped for cash and potentially looking at raising bank debt as a means of getting through this economic cycle. As a bank, what advice, tips can you pass on to these individuals? As you said, Dan, there's a dearth of venture capital. So how do SMEs, if it's not a bank, how do they get through this period? What advice can you share?
So if I go, I think a couple of points, and I'm sorry if these are, sound a bit like mom and apple pie, but obviously whatever decisions you make now, invariably they will have a longer term impact. So it's about taking decisions for the long term and not the short term. I know that's easy to say. I guess what I would say first and foremost is that please talk to your bank, whether you have concerns or whether you want to grow. The best bit of my job, I'm sure the best bit of Bernd's job, is talking to customers or potential customers. Genuinely, it's the best bit of the job. There are lots of bits of the job that aren't great, but talking to customers is always, I always come away more positive about the UAE and its future when I've spoken to customers. So being open early and no surprises and transparent and having detailed, cash flow forecasts in particular, which is something I see less of in this region than I used to see when I was in the UK or in Europe. I feel it's important that you've got really good granular financial information. But I think alongside that, it's about understanding the dynamics of your cash flow, really understanding what drives it. And we've done lots of webinars and forums and programs to try and sort of guide customers and potential customers as to cash flow. That's what I would seriously recommend. If there's one thing you need to think about at all times, it's about how you drive your cash flow.
Yeah, good. This will sound as if Dan and I have discussed this beforehand, but we've never even met. So this is really complete coincidence. But my comments are extremely similar. I would say, if I summarize them in you have to be very realistic about what your business generates and make sure that the debt you take on is realistic given that cash profile. The second one is be transparent with the bank at all time about your challenges. It only works if we know what your challenges are. If you try to hide things from the bank, it's not going to work. So be as transparent as we can. The moment that we know the problem, it becomes our common problem to solve. So that is absolutely crucial. And I think the last one, you have to be forward-looking and proactive, especially in times of this crisis. If you come to talk to us, or if we come to talk to you, and Dan is right, it's by far the best part of the job, then make sure that you've taken action already. It's your business in the end. You have to make sure that you manage it and that you manage it forward-looking. And if you do these three things, then I'm sure the relationship with the bank will be very constructive.
Got it. Fair enough. I think that would be very useful to everyone watching.
So shall we move on to the last question before
Absolutely.
we take questions from the...
You touched upon it, but I think...
Yeah, I know we touched upon it, but let's be specific. So Bernd and Dan, how have the government stimulus packages affected your respective banks? Do you see this monetary injection trickling down effectively to the businesses and individuals?
Well, I guess I spoke earlier about the test program here in the UAE and how effective I felt that program has been and continues to be, how quickly it had been set up and how quickly we were able to work to support our customers. So I guess I won't say anything more other than the fact that I would say that we know it's working because now customers are starting to repay those programs, and they're repaying them quite comfortably from their own reserves and liquidity. So they've had the time to get themselves organised. So I think that's one of the reasons probably why Bernd and I are cautiously optimistic for the UAE for the next 12 to 18 months, because we can see these facilities now being repaid, which says that these customers have been able to use that facility to give them the time and the headroom to look forward.
Understood.
Yeah, I agree. I think the measures worked, and they sort of have taken away or have supported all of our clients at the most critical part during this crisis. We see business coming back to normal, clients coming back to normal, repaying us as normal on their own accord. All of the banks, and I'm sure it's as true for HSBC as it is for us, are here to support our clients, and we will continue to do so. The government measures have been an enormous help, and banks are there in a partnership with our clients, and that will continue.
Got it. So, Dan, I just have a follow-up question for you. Given HSBC is obviously it's a global institution, do you see stimulus packages in other sort of neighboring countries to be as effective as the one in the UAE? Is there any comparisons that you can make, or any comments that you can provide?
That's quite a difficult question to answer without offending any one of the 70 markets in which we operate. So I would say that what was consistent was the desire of governments to work in partnership with commercial banks to ensure that they were able to support borrowers wherever they may be. And what I would say about the UAE in particular is the speed. It was the speed and pragmatic nature of the response. It didn't take very long to get organised, and I feel there's been very little noise in the system. So I think customers got the money, and they got the money quickly. and that meant that we're able to organise themselves, and now they're able to repay. That would be the only observation I would make.
Okay, fair enough. Bernd, do you have anything to add to that?
No, it's unlike HSBC, we only operate in the UAE, and so the only thing I can say, the system here worked well. It's as simple as that, and I think Dan was right. The fact that there has been very limited noise about it is sort of proof that the system worked well for the banks and for the clients.
Right, and then just on we've touched upon everything from a very economic standpoint. From a health perspective, COVID-19. Are there fears, or when you say cautiously optimistic, is part of that caution linked to a second wave? Are there talks that you have internally regarding a potential second wave and a lockdown in the UAE happening again, given cases are on the uptick? Is there anything like that surrounds your conversations?
No, so we're prepared for everything. As I mentioned, I think in the midst of the lockdown, we had almost everybody working from home. We're back today to over 70% of our staff being physically present in the office, and the rest working from home. We have any or are prepared for any scenario, but a scenario of a second wave is not our base case. So that's not on the top of the agenda.
Yeah, I think, Yuvraj, I would say that it's very rare that you'll hear a banker say they're anything other than cautiously optimistic. So I think cautiously optimistic is probably a good sign. And actually, I think we've got an awful lot to look forward to in the UAE with the Expo next year. We've got some amazing events as a bank, virtual events from a future cities perspective, as well as from a global economist perspective. If you actually look at the economic indicators for 2021, they are encouraging in GDP terms across the region and including in the UAE. And I think, you've only got to look outside and talk to customers to see that, that their order books are building and the momentum is developing.
Good. Fair enough. So thank you guys for answering those questions. That's all we have in terms of the ones we prepared. So now I'm going to move to our audience questions. We've got lots of them coming on Facebook and Facebook and YouTube. So I'm going to start with the first one. So John Smith from Russell Kamer asks about the Israel deal. That's something we've not touched upon, and I'm sure you knew this could have come up. Obviously, UAE, Israel have just signed a peace deal. What's the sort of rhetoric around HSBC and CBD? How bullish are you? How optimistic are you?
Well, it's a great question. I think, again, it's a reflection of, of how forward-thinking the UAE is and looking at its role in a regional and a global context. We have operations in Israel. So clearly this augurs well because it means that we'll be able to support our Israeli clients in a UAE context going forward. And we've already had dialogue. My counterpart who runs Israel to talk about ways in which we can collaborate further. So I think it's encouraging.
Yeah, I agree. I think both nations have a lot to offer when you look at things like healthcare, technology, fintechs, technology startups, tourism. So I think from setting aside all the other political implications, I think from a commercial perspective, it's very promising, very positive.
If I could ask, has any, have you been in talks with your counterpart, Dan, in Israel? Has your Israel office, I'm assuming HSBC has an office in Israel?
Yeah, that's right. Yes, so we have an office we have HSBC Israel, and I've already had dialogue with them about ways in which we can collaborate to take things forward commercially. Yes.
Understood. Awesome. Great. So let me move on to our next question. The next question is from Jonathan Miranda, and that is, how have you dealt with this in your personal lives? And I'm assuming that means COVID-19 and running organizations like you run. And how do you think the future of education is going to affect the industry, or the economy in the region?
It's a very good question. So I am the proud and fortunate father of 10-year-old triplets who suddenly were stuck at home for 6 months rather than going to school. I must confess that my wife did an amazing job in the homeschooling, and the only thing I did when I got home was the mathematics. I've been to office for most days just to keep some structure to the day. But I do think the COVID crisis has shown that concepts like homeschooling or video conferencing, what we're doing right now, Teams meetings, Zoom meetings, do actually work. And as Dan was saying at the beginning, in many ways, they are more efficient and more effective than the old forms, which typically involve lots of traveling and travel time. So I think it's there to stay. I think there will, for perhaps forever, but definitely for a long time, a proportion of our staff that will work from home. Not always the same people. There will definitely be some rotation to make sure that people keep on feeling part of the organization and really get the CBD culture. But I think that's there to stay. Like I think that e-learning or homeschooling by digital means is something that is there to stay as well.
So I agree with that. So I think it's probably too early to tell. But when I look at my personal experience, I was very fortunate. You know, I had space at home to be able to work. Lots of people don't have that. So I think you have to be cognizant of the fact that the broader population don't necessarily always have the flexibility that you're looking for. People who may be sharing an apartment or have a very small space to work in. I think some people have found it actually much more scary than others, particularly if they're on their own. And you think about the UAE as a very much an expatriate community. A lot of people are on their own and away from their families and able to travel. So we've done a lot of work around, I'm sure Bernd's team and CBD have as well, around mental health and well-being, because I think there will be some challenges in that regard going forward as people adjust to the new environment. I think, like Bernd, I'd never worked from home before ever, and then I spent almost 3 months working from home, and so we will have a blended approach going forward, and I think that's to be welcome. I think what we need to avoid, though, is becoming a slave to Zoom. And you probably see the statistic, Yuvraj. Zoom has the same market cap as the 5 major UK banks, which is astonishing. But it just shows how quickly technology can drive businesses forward. But I think we need to ensure that we don't become dominated by our technology. And I think we also need to watch people's sort of productivity, because I worry that people confuse being on Zoom call after Zoom call with being productive. And that's another thing. And let's not ignore the fact that, human beings are social creatures. We like community. We've all joined the organizations we work for in part because we like their values, and their values are in part because of the community spirit, that esprit de corps. So I think we must ignore that. But to just tackle the second part of the question, I do feel that this could be transformative for education. And I see in the UAE an awful lot of companies that provide online learning or a mix of online and school learning. So I do think that's going to be a very important feature, probably more so in higher education than I would expect it to be in secondary education. I think it's pretty tough, but certainly with 3 triplets, I would have thought to have them all paying attention at home or online. But I think as children get older, they can probably do a mix.
Awesome. So I've just paused all the questions. I'm going to post 3 last quick questions because we've just come up in an hour. So Zain Malik from London asks, Bloomberg has reported in the last week that Dubai is in talks with banks for a dollar sukuk sale, so Islamic bonds in dollars. Do you know anything about that? Obviously, other Gulf states have done something similar. Is there anything that you could comment at this stage on anything such as that?
Not really, no.
Okay, fair enough. Bernd, anything?
No, I think Dan doesn't want to comment, and I genuinely cannot comment.
Yeah. Okay, fair enough. Okay, well, we have another question from Ajman, from someone in Ajman. How have you felt in your own lives in the position you're in, and how have you been dealing with employee behavior throughout COVID-19? Has it been volatile at all? Has it been difficult?
I think because this is such. I think we try. I can't comment for Bernd, but I guess we try to be very understanding and tolerant because these are incredibly unusual times and people respond in different ways. So trying to be kind, compassionate, and caring, and giving people as much flexibility as they need.
Yeah, we've essentially done the same. I think we had at any point in time, at least probably most of our branches open. So we had people facing customers at any point in time during this crisis. We have great respect for these guys and the job they've done, the men and women. And other than that, it's understanding people's situation, and not everybody's situation is the same.
Yeah, and communication, Brad. So forums like this today, but I've literally done a call every fortnight with my entire team of about 1,100 people and regular daily contact with most of my leadership team as a collective. So I'm sure Bernd's done the same. So a lot more communication.
Yeah, fine. Great. Lavraj, anything to add to that?
No, I think that covers it. We've had a good string of questions. Do we have time for a couple more?
Yeah, so I'm going to ask one last question of my own. Commercial real estate. So obviously Zoom and working from home is a big part of life today. As COVID-19 disappears and as we move into a time period where a vaccine could be available, obviously we have the option to work 100% from the office, which many organizations are already doing. As HSBC, a global institution and commercial bank of Dubai, do you require less commercial real estate? I mean, office space. Do you see demand for office space going down? Do you think working from home will be the new norm, at least more so than it was prior to COVID-19?
It's a very interesting question, and I think there are sort of almost contradicting forces at work. So if you would strictly adhere to, say, a 1.5 or a 2 meter social distancing, then we would need a lot more commercial real estate than we have today. A lot more, because buildings are not set up for that, elevators are not set up for that, access points are not set up for that. So I would say that's one force. I think the other force is the element of working from home. But as Dan was saying, and it's a very important point, people are social animals. And nobody joins Commercial Bank of Dubai or HSBC to then sit at home for the rest of their career. Part of it is the physical interaction with your colleagues, and part of it is going to an office. So I don't think that will go away anytime.
Yeah, I think the point I'd make as well, Yuvraj, is I think the way in which we live and how we live is going to change. And the city of the future is probably going to be very different from the city of the past. I think across the Middle East, there are over 250 million city dwellers. There are 40 cities with more than 1 million residents by 2035. So if you look at the Middle East today, it probably is producing one of the most remarkable urban experiments in history. And therefore, the way in which we work in the office is going to change. But we think for the GCC alone, and this is one of the things I'm really excited about, and this goes to the core of the real estate opportunity, we think there's a $2.6 trillion opportunity in future cities, of which 2.6 billion is in the GCC alone. And that's across urban transport, trade and logistics, urban development, how you repurpose buildings to be green, how you make sure there'll be more people living in cities rather than on the suburbs. I think all of these things are very exciting for people like yourselves, our customers, as well as banks and the governments in which we operate.
Got it. So I think I'm just going to ask one last question. So Jonathan Miranda again asked, what do you think is the next, so that goes to your question actually, what we were just talking about. What do you think is the next step for suppliers, manufacturers and contractors? I guess given the real estate, given our reliance on construction as real estate as a part of the economy, in addition to trade and everything else that the UAE sort of relies upon. What is the future from your perspective with the declining government spending on new sort of hospitality projects, infrastructure projects? What do you think is the future? Is it really a survival of the fittest, that sort of Darwin's survival of the fittest game for manufacturers and building materials such as ourselves, contractors, and all the sort of supporting functions, as banks, how do you see the industry moving forward?
So
I think
that Dan, oh, you go ahead, Bernd.
Yeah, sorry. I think Dan and HSBC are clearly much more experts on this than we are. But I think there will be changes to the global supply chain. There will be more localization of manufacturing and more localization of supply as well. And that could have a positive impact. I think all companies have learned that you cannot just blindly rely on the global supply chain being there all the time, anytime.
Yeah, and I think what I would stress is, I guess, building on Lovraj's point of earlier, let's not underestimate the sort of the resilience of the Middle East and particularly the UAE. So you've got the Middle East has had a CAGR over the last 25 years of 4% GDP versus 2.8% globally. And when we look forward, we don't see that CAGR changing particularly. And we talked about digital. We didn't talk a huge amount about digital, but we're seeing a lot more work on blockchain technology now for supply chains. And actually, yesterday, we issued our first public debt that was fully blockchain enabled in Asia. So I think that's going to be a key driver to change here in the UAE and the region.
Fantastic! Wow, awesome. Is there anything, Lavraj, you have?
No, I think that's fine. We've covered all the questions.
Awesome. So, Daniel, Bernd, thank you so much for joining us on this fourth edition of TerrazzoTalks. It's third edition of TerrazzoTalks, sorry.
Yes, Dan and Bernd, thank you very, very much for being a part of this session today. It has been a pleasure and privilege to have you both with us. Thank you both very, very much.
Thank you very much. The pleasure has been all
mine. Thank you for having us. Thank you very much.
We'll be back with our fourth episode next week. I think we've got your colleague, Martin, along with Sunil Kaushik of Standard Chartered. So Daniel, your colleague, and so HSBC and Standard Chartered will be up next week for another set of questions. And the topic will be how does the regional economy stack up against the rest of the world? So more of a macro question with, again, will be what will be very valuable insight. So I hope all the participants that have joined today found this very valuable. Once again, Dan, Bernd, thank you so much for joining. And we can't wait to have you guys back probably in a couple of months from now to see how sort of accurate our foresight was.
Thanks very much.
Thank you so much, guys. Anything else you'd like to add? Otherwise, I think we can sign off.
Will be a pleasure. Thank you.
Thanks, guys.
Thank you so much.
Thank you.
Great seeing you both.